Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. All right, welcome back to Fox Hill's Wealth Wisdom. We have another great week ahead for you in store today. This is the podcast where we break down complex financial concepts into everyday actionable strategies for you that you can take and execute in your own life to create lasting wealth. I'm your host, Justin Noby, and today, as always, I'm here with the amazing Eric Benz and Bill Ryan at Fox Hill Wealth Management. Today, we're diving into something that we think could be a real eye-opener for our listeners, for you. We're exploring what's called the 7 levels of wealth. It's a framework. And honestly, when I first heard about it, it opened up my mind a little bit. So, Bill, this framework comes from Grant Sabatier. Can you just give us a quick background? I know he's in the FIRE movement, but
yeah, I mean, basically, he's a guy who, kind of break it down. He's in that FIRE, that financial independence, retire early. Yeah. Theme that you hear a lot in social media circles and things like that. And, but what he basically was just trying to do was, he was basically just trying to get to a point where he, just like it says, financially independent. And he kind of had a strict process in which he had, basically no money. And in over 5 years, he accumulated over $1 million by utilizing, this process. So,
yeah. It's pretty inspirational. And, Eric, he's, you realize that most people don't actually know where they stand financially. So what do you think these 7?
Yeah, people think in terms of, rich or poor, but wealth building is much more nuanced than that.
Yeah. And it's really fascinating. And I think the framework overall shows that half of working Americans are stuck at what he calls level 2. So
yeah, level 2 is when you're living paycheck to paycheck. So, someone who might be making like 6 figures can be stuck at level 2 if they're not managing their money properly. It's that lifestyle creep, right? Where even as you make more, your living expenses tend to go up.
Yeah, and you're struggling to make ends meet.
Yeah.
But you might think you're doing pretty well financially. So we're definitely going to dive into all these levels and get caught up on what's happening, just catch you up on the 7 levels. But first, let's dive into the rapid news economic market segment. Bill, stock markets are rallying this week. Record highs. I think S&P just hit all-time high, up 7% for the year. What do you see? What's going on?
Yeah, I mean, that's a big thing, right? So we obviously had huge pullback in April with all the start of, all those tariffs and everything like that was coming out. But, we hit a bottom. May, obviously, very well. June, we kind of had a record month. And, continuing to move forward as we head into July here. NVIDIA has become the first company to hit a 4 million market cap.
Trillion.
Excuse me. Yeah, 4 million. 4 million in 1992. Right. So that's the first company to hit that 4 trillion market cap, which is pretty unbelievable to think about. But when you think about the kind of the leader in the AI space, NVIDIA is probably the first stock that comes to mind, right? They're powering everything kind of behind that, or 80-90% of it anyway. So that's pretty amazing. We have heard a lot about the tariff war in recent days, right? With Trump, slapping 50% on Brazil and then, 35% for Canada. So
we'll see how that, the BRICS nations too, I think, this week as well. Tariffs on them this week.
Yeah.
We don't really see the market reacting to that though, Bill. I think the market's telling us that they don't see it as real. It's just another kind of fluff negotiating thing, and it'll end up being a lot less than that.
Yeah, I don't know if he was just mad he was kept out of that BRICS convention or something like that. We'll see.
I'm sure that was part of it.
See how that.
Well, I think he said the BRICS was created to destroy the dollar, so we're gonna tariff them.
Yeah, I mean, it was kind of a way to try to get around the American
Oh
dollar,
yeah, no,
right? They
he's
wanted
right.
to, the American dollar is obviously the world reserve currency,
Yep.
and they definitely were put together for some detriment of, you know what I mean, of the United States dollar. There's no doubt about it. I mean, I'm sure there's other things in place there, but that's one of the biggest reasons they wanted to get around having U.S. dollars for everything. I mean, oil's traded in U.S. dollars, all
Yep.
these huge things, and they're trying to get around it. So
Yeah, yeah, and Bitcoin hit record high this week as well. So something we don't talk about a lot is crypto, but had to mention it this week. I think it's It also, interestingly, I heard a pundit out there talking about Nvidia's connection to Bitcoin, which I didn't really realize. A lot of the mining companies are using these big GPU chips. So
Yeah, and you see the miners. Yeah, CoreWeave, right? They bought a mining company for like $8 billion. So you see there's a ton of value there, and people are still going to keep
didn't they?
investing in those. Limited, distribution of Bitcoin. Miners keep mining it. Price goes up. So
Yeah,
people see that continuing.
yeah,
yeah,
it's amazing.
CoreWeave has some insane amount of NVIDIA GPUs and things
Yeah.
like that too. I mean, I forget what the exact number is, but I was astonished how much they actually own.
Yeah,
So
yeah, it
NVIDIA is
really
getting
is.
it from all directions.
Mm.
So do you think, we've back to tariff concerns? Should listeners be thinking about this kind of volatility? Should they be worrying right now, or what are your thoughts, Bill? Overall, I mean, there's more market volatility now because of this. It's at record highs. Overall, what should listeners even care about this right now, or
I'm,
long term investments?
as you're gonna hear me talk about this in any market conditions, but the next recession is always on the horizon, right?
Yeah,
And it's always certainly a concern, right? So that's why it's so important to have those foundations put in place within your financial plan. And if you do that, and you have the right insurances in place, the right emergency funds, you have the right amount of cash coming due, maybe from fixed income investments in the very short term, money markets, etc. It really shouldn't concern you too much, right? Because you should be putting yourself in a position where that, regardless of what the market's doing, you're able to keep your plan going, and your plan shouldn't just be for the next 6 months or 12 months, right? You should be looking 1, 3, 5, 10 years out,
yeah,
10 years plus out, right? And if that's how you're investing with that in mind, short-term
hmm
volatility should not concern you. If the
that's a
market
great
goes
point.
down for a year or 18 months, it can be debilitating while you're in it. However, it should not change how you invest and how, you know what I mean, how your plan is working. So
Right.
Yeah, yeah, makes sense. And then a lot of people are talking about a potential rate cut as well, maybe this summer. We talk about it a lot on the show. Like, will there be two? What's going on? What do you guys think? Any changes there, Eric?
I think the market's pricing that in, and
Yeah,
Goldman Sachs raised its forecast to 325 basis point cuts in 2025. So they're thinking September, October, and December. Which, hey, that's good news for for small businesses. Good news for anyone that needs to refinance. They're stuck at a higher mortgage rate. So
yeah,
hey, hopefully those projections are correct, and maybe we'll see a little more room to run for the stock market as well.
that's interesting. Do you think some of this like pump is the recent pump is because of that change in forecast?
Oh yeah, 100%. The
Yeah.
market's forward looking. Like that's
Mm,
the first thing that's going to react to any projected change, and
yeah.
everything else will follow.
Got it. Got it. All right. So let's jump into the main topic. Let's start with the basics. Eric, can you just give us a quick overview of these 7 levels of wealth?
Yep. So we can think of it as like a roadmap from financial dependence all the way to abundant wealth.
Mm-hmm.
There's 7 levels: clarity, self-sufficiency, breathing room, stability, flexibility, financial independence, and then the last is you get to that abundant wealth level. And each level builds off of the previous one.
Got it. Okay. So it's kind of almost like, I think of I relate to like Maslow's hierarchy of needs. You learned that in high school. It's kind of, maybe it's similar, maybe as a more of a pyramid style. But starting at the beginning, you got level 1 is clarity. Bill, what does that actually mean for someone listening to now? Like what is involved in clarity as a step?
Yeah, I mean, level 1, is one of the 7 levels of wealth where everyone starts, right? It's like the most important step because you can't get to where you're going without knowing where you're starting. And I also just said, you know what I mean? I said that 68 times on the last podcast. Got to start cutting that out. But clarity means,
and we just edit out in like the post, right?
There's nothing like a podcast to make you.
I said it over and over and over again. When I was listening to it, I was wow.
It's okay. We're all improving.
Yeah, but the clarity, it just means taking complete stock of your financial situation. So, how much money do you have? How much money do you owe? What are your what's your net worth? What's your liabilities? Where do you want to get to? That's what you're doing during that clarity level. So getting that financial snapshot of where you're at.
Got it. So it's really getting very serious and honest with yourself there. On what I mean, in this step, are you also putting in your goals, like your dreams and goals as well, or?
Yeah, should be what are you looking to do? Are you looking to retire at 60? Are you looking to retire at 65? How realistic, right, do those things look? Someone who you might say is not too far of a time frame, but there's a lot of factors that go in there.
Yeah.
Right? You may have children. They may have just been finishing up college. Do you have enough money to withstand having to pay your own insurance for 5 years, right, until Medicare kicks in? Do you have, there's just so many things that come into play. So you really got to get that. Again, we talk about that net worth statement, the going over your assets and liabilities, but what does your cash flow look like? What does it look like with inflation factored in? What does it look like with rate of return on your investments factored in, or if volatility hits during that time period, right? You got the sequence of returns risks, things of those. How does that look, right, in a financial plan? So that's why it's important to get.
So getting really detailed with every single thing.
Yeah, at least general details. I think you want to. Yeah. Your life's going to be a little different. I mean, say if you're, 45 and, what things are going to look like in 15, 20 years, but you get a pretty good picture.
Yeah. And Eric, what are some practical first steps that people can take right now if they're at level 1, or maybe if they're just listening and want to do this exercise with us live?
Yeah, you have to start somewhere, right? For most people, you're running most of your expenses through your credit card. You can just hook up something like a Rocket Money or Mint. That allows you to track your expenses, and then you can calculate your true hourly wage. So that's the amount of money you make minus, commute time, work expenses, things like that. And then from there, you want to actually sit down and set measurable goals, not just, I want to be rich one day. You're actually saying, I want to hit, this, I want to hit level 3 at this point, in 5 years or something like that. So it's really making those goals like a ladder rather than this giant aspirational thing with no real steps to get there.
Yeah, I like that, getting that level of detail down. I think that's powerful.
Yeah.
And then, so level 2 is self-sufficiency. Bill, it sounds self-explanatory. It's got to be a little more complex than that.
Yeah, you're right. Self-sufficiency means, just earning enough money to cover your expenses without any outside help. And, that could be anything, getting money from parents, relatives. I think the biggest thing is not relying on credit cards, right, to make ends meet. There's even people who are making 6 figures. I mean, you're talking still 40% of people are still living paycheck to paycheck. So it's making sure that you kind of get in lockstep with your expenses versus what you have coming in to make sure that you meet your needs and not, you're not delving into that credit card, that high interest debt that can really hurt you.
Yeah.
And that's important. That's why being self-sufficient in that manner is so important.
So even high earners can be living paycheck to paycheck. How? Like how is that
Just like
possible?
Eric just mentioned, that lifestyle creep, right? It actually doesn't creep up. It kind of jumps on you.
Yeah.
But yeah, just because you make a lot of money, it just doesn't mean that you're saving it, right? You make more money, you want to do more things. You may say, hey, I know I have this bonus coming in a couple months, so let me put some debt on the credit card and I'll pay it off then instead of waiting for the money to
Or
come
you've
in
already
and
planned
then.
that thing that's going to reward you for the hard work,
Mm,
that drove you to make that more money. You're like, well, I worked really hard and I'm going to plan this vacation for when that bonus comes in or when that raise comes in, or I'm going to get this piece of jewelry or whatever, upgrade the car.
you're like
It just
planning the expenses
magically
before the
moves
money's
up.
coming in.
Yeah. Yeah, we're all guilty of it.
Yeah.
It's very easy to do.
Yeah.
Yeah. So what's the path out of level 2, Eric?
Yeah, you got to focus on your like 3 big expenses: housing, transportation, and food. Yeah, so focus on those. Cut the unnecessary expenses like ruthlessly, and that's what we talked about. You got to actually sit down, look at the credit card,
I think we talked
put it
about
in
this
the
on the last
buckets.
episode too.
Yeah, and it's pretty easy. Like once you figure out, does this add value to my life? Do I really need this? You can cut stuff very easily.
Mm-hmm. Yeah. So all right. So you break out of paycheck to paycheck cycle. Now we're hitting level 3, which I think is breathing room. What does that
Yeah.
look like?
Well, you've got money left over each month now, and you can start building wealth. You can start putting that away. Psychologically, it's a game changer. So now that you have that, you can automate savings. 10 to 15% of your income each month, put that away. Build that emergency fund, and begin paying more than the minimums on your high interest debt.
Got it. And then so that brings us to level 4, which stability. So Bill, this sounds like things get serious, and maybe we're really making headway in our financial goals here.
Yeah, I mean, this is right. This gives you your foundation. This is you've gotten rid of your credit card debt. You're now putting money on your credit card, but you're paying it off each month. So it's no longer just putting money towards interest in that area. You have 6 months of living expenses saved in an emergency fund, which guess what is also earning you interest, right? At this level, you're not worried that if you do lose your job, hey, you actually have. You might see it as almost like an opportunity, right? Now it's a point you can look for something else, but you're not worried financially because you have the backing there, right? So that stability is huge.
Got it. So you should have like a nest egg of some sort at this point. Like you're building a nest egg, maybe 6 months of expenses covered.
Yeah, I'd like to use 6 months. It's different for everybody. I mean, if you're in a job that maybe has more security, right? Maybe you don't need that much, and maybe you only need 4 months. But but then you can invest. You know what I mean? The difference. But yeah, different for everybody depending on what you do, your industry, things like that. But 6 months is definitely a good general rule of thumb.
Good goal. I think even a few months is hard for a lot of people, and it sounds daunting because depending on how much you're spending. So I guess that's a big part of the equation. But you stocking away a few months, that could look very differently for a lot of people. Maybe if you're listening, it sounds overwhelming. How do people how do you get there? Is it an overnight thing or?
Oh yeah, I mean it can be incredibly difficult for a lot of people. I'm not saying that it's something that you can turn a switch on and make happen, right? So
Yeah.
it might just be a slow and steady approach. It might, this is something that might take you 2 years to do, but make sure that all your insurances and things like that are in place, your health, disability. Make sure life insurance. If you got a family who's dependent on your income. But yeah, it's a slow and steady approach. Don't think you're going to solve it in 1 month or 6 months necessarily, but having a clear defined plan that can get you there. Invest consistently. We talk about automation a lot. Those things, right?
It's like
Right.
be the
And that
turtle. Be the
Yeah.
turtle. slow and consistency.
Yep.
All right, so then we get to level 5. So we're at flexibility now. Eric, what makes this different from stability? Well, how is this changing?
Well, you have those savings now. You got the 2 years living expenses built up, and yeah, I don't know.
Do
If
you
think
think
about
2
it, you could
years is
literally
what you
take.
need, or can you stop at 6 months? Is that
Well, I would. Yeah, I mean, it depends on like that 6 months. That's like the bare minimum, right? Like I know
okay?
Bill said,
I'm talking about
if you're
liquid.
at a safer job, you might not even need that. But like, I mean, we've seen the last 6 months some of the safest jobs that have
Mm-hmm.
existed the last 10 years got some pay cuts
Vanish.
there, right? Academia, you think of academia, the safest thing. A lot of the researchers pay cuts there. You think of big tech as the safest job, tons of job cuts there. So yeah, you want to get to that. Hey, 6 months in high yield savings, and then you have in like a more liquid account that's invested in the market, you've got that like two
Yeah.
years of income. I wouldn't personally, like if you're earning, you wouldn't necessarily. I mean, depends on everyone's plan, but you wouldn't want that all sitting in cash.
Yeah, probably like get that, that other
Yeah.
remaining 18 right months. That might be in maybe low beta investments, something that's not too correlated to the market, but maybe paying some
Right.
dividends. Stock price is probably not going to grow at an alarming rate, but you're getting some dividends, maybe getting a little capital appreciation. You're participating in the market, but not at maybe the high risk of call it
Yeah, that's
some
a key
high
point.
flying tech stock stuff like that. So
Yeah.
Yeah, I think that's really good. So how are I guess you've got all the savings. Are they like how do they get there? I don't know. It seems like it's impossible for most people. Just
One piece at a time. It's
yeah.
not a it's not a race. It's all those steps we talked about before. They
Mhm.
build on each other, and once you get past, once you're at step 4, it's a lot easier to get to step 5, right? If you've been able to put away that 3 to 6 months of living expenses, getting to step 5 is easy. Getting the 2+ years of expenses in other investable assets.
Mm-hmm. Okay, so we got level 6 next, financial independence. Bill, give it. Just what does this mean? Like in your terms, what does financial independently mean for everyone listening?
I mean, very, very simply, right? It's when your money or your assets is generating enough income, right, to cover your living expenses.
Yeah, got it.
Okay,
Yeah,
so
that's basic.
technically, you could walk away from working, and your assets would give you enough money to
You could
cover
just
your.
retire today.
Yeah, essentially, right? I mean, there may be some risk, right? It's still on the table, so there's things that you need to think about, but
Mm-hmm.
it's generating enough money. So whether it be from real estate or just from taking a portion of your portfolio out each year for living expenses, that's what that does. So
Mm-hmm.
you hear a lot in the industry talking about, hey, you're going to pull on 4% of your assets, right? Because that's going to allow that'll give you 30 years, right, of pretty safe, reasonably safe, right, to assume that if you pulled out 4% of your portfolio a year,
Yeah.
you're not going to run out of money.
Yeah.
So that's you get to that point, you get to that where that's covering your living expenses, where you're considered financially independent.
Got it. And that's going to look, depending on what you need, that's going to look very different. And that's why you need to create a plan for yourself and customize it. But I mean, if you need 50 a year, you can retire on like a 1.2 million ish at that 4% rule.
If it's the 50,000, yep.
Yeah. Okay.
Keep in mind when you're in retirement, there's other things, social
Things
security,
come up.
right?
Yeah.
Yep, things like that. But I think that 4%, what's good about that too is that hopefully with a well-diversified portfolio, you'll see a higher rate of return than that, and that will allow you to, increase your payout over time so that you can combat, inflation, things like that, right? So.
Gotcha. And then, so the last level, Eric, we've got abundant wealth. That sounds like the touchdown.
Well,
Holy
being
grail.
rich. Yeah. Yeah. Yeah, you got more money than you'll need. Market swings aren't going to bother you. You know, easily cover your living expenses, and then actually you have more money. You're looking to do other things, impact investing, preservation for the next generation, giving, and you're thinking about your legacy and the difference you can make in the world. This is a great spot to be. But I'll tell you this too, though. We have clients that are level 7 that still worry about market swings, actually. So it's yeah, but it is a great spot to be, and you can do a lot more with your money and invest in a lot of different things too.
It
But
seems like at level
yeah,
7, you start to think about others, like the future, maybe like future generations, and maybe
yeah,
that's why they're still worried about market swings.
sure, and it's just like it's human nature too. That's yeah, I don't
Yeah.
know.
Yeah. That's true. All right, so we got all 7 levels explained. Bill, what would you say are the key strategies that help people move between these levels? Like if you're depending on how you're listening and you're like, all right, I've identified, I think just by listening to you guys, I'm at level X, right? Level 3, whatever.
Yeah.
Wherever they are, how can they move between?
Yeah, no, that's a great question. I think the biggest thing, first thing, focus on making as much money as possible, right? So
Hmm.
doing the best you possibly can at your job, making sure that you have, you're always working to, increase your earning potential, right? That's huge. So, at work, what can you be doing more to make yourself, more important tool in the tool belt, you know what I mean, so to speak, for your
Yeah,
company,
more attractive.
or for your clients, right? If you're self-employed, what can you be doing there? So that's a huge thing. Again, no one likes to do this stuff, but expense management. Everyone wants to spend, right? We're consumers, we're humans. Let's,
That
what
feels
do we
good.
want?
Yeah.
Consumption, right? And we're American, which really makes us consumers. So but at the same time, again, you got to live below your means to a certain extent,
Yeah.
right? And you don't want to deprive yourself completely, but working with an advisor or a coach can kind of help you get there because they might look at you a little cross-eyed, sometimes, or even you having to say it to them, right? I'm spending this much money on this, and it's like, oh wow, cut back on that.
That's a big
And
one. Having to say it out loud to someone else.
yeah, and then it's, hey, could we divert some of this into maybe for future oh yeah, that makes more sense, right?
Yeah.
So there's that, and really just again, smart investing, right? So, start early, invest consistently, work with someone who's going to help you, you know what I mean? If it's not your forte, right? As investments and things like that, find an advisor, someone who's going to work with you on a fiduciary basis and really look out for your best interests. That's really huge. And, you really just, get in the right mindset. So again, realize that, yeah, it's not all going to get solved in a month, 3 months, 6 months, 12 months. It
Yeah.
takes time. Okay.
Yeah.
So you're not going to do this and feel the stress just is going to go away overnight. That's just not, you need to think excuse me, you need to have a long-term, right, outlook and, um, try to automate stuff so that the stress does not build up in the short term, right? That automation will really help with that because it's out of sight, out of mind type of thing. It's not another thing for you to worry about or to think about. So doing some automation with that saving, investing, whether it's have the money coming right out of your paycheck or having money come right out of your bank account at a
Hmm.
set time each month, that will help a lot of things too.
Got it. And Eric, what's the biggest mistake people making when they're trying to advance through these levels?
People get impatient, right? To quote Miley Cyrus, "It's the climb." It's my father-in-law's favorite song. But yeah, you don't want to, skip levels, right? Each level is important. It keeps you on track and it prevents you from getting too aggressive with your investing. Let's say you want to skip up to like level 6,
Mm-hmm.
and by doing that, you're investing in like crazy crypto or penny stocks. Don't want to do that. Let's invest consistently. Let's save. Let's not skip steps. Or you're cutting so many expenses that you're like not living your life. You're not living your life to the fullest. Like
That's a great point.
there's a middle ground there. So it's, a big part of it is not being impatient. and just, patiently get to each step. So that's
You want to YOLO, but only to a certain extent, is what you're saying.
yeah, exactly.
Yeah, and Bill, like if they're feeling like they're stuck at a level, what is that usually caused by?
I mean, Jesus, they're probably just not being honest about certain aspects of what they have going on.
Yeah.
So maybe even go back, right? Look back at other steps, kind of review them real quick, and say, hey, have I been doing right? What I previously thought that I was, I think is a good way to kind of review it, and then kick back in going forward.
Yeah, that's really good. This has been, I think going through this has been really good. Hopefully, if you're listening, it's been very helpful. Before we wrap up, what action steps do you each want our listeners to take right after this episode? Because I think we listen to information a lot, and it's just kind of we let it pass. So what solid action can they take today, Eric?
For me, I would start with like a baby step, and that might be just sitting down and calculate what's 3 to 6 months living expenses for you. Start there.
Okay.
You don't even need to think about what you need to, expenses to cut or anything like that. Just get that number in your head.
Okay. Bill, what about you?
Yeah, I mean, I think
Number
that's
one
a big
action
thing
step.
for me. Number one action step, just make a net worth statement, okay? But make it a detailed one. So what you have going into each account, rate and term of all your liabilities, things like that. So you kind of have a clear look at, what you have for money, where you're going to be adding money, and then your liabilities, right? So have that written down. I think that's a big thing, right?
I feel like my step was way easier.
I'm surprised neither of you said go to foxhillwealth.com and contact us today.
That's
great advice.
The thing is, we do all those steps. So it's you know what I mean? It's one of those things that you can work with us. We can take you through that. We can go through the baby steps of it and have you get that information together, and then we put it together for you. So that's a big stress reliever. Maybe, hey, outsourcing some of these things, right, to someone who can put this stuff together for you. How about that, Justin?
That's actually the real level one is calling Fox Hill.
The real level ones don't deal with it. Just push it off to someone else, and then you're good to go. Yeah.
No, I think that for everyone listening, if you're like a DIYer, this is why we're doing this, right? This is why we're giving you this information. But a lot of people need that extra step of accountability. So I joke, but it is serious to throw that in there. But I think if, overall, just to wrap everything up, I think if you guys are listening and this is like hitting home, hopefully we don't advertise the show. We just do it because we want to help everybody. Share it with someone, be a friend, share it with a friend. I think, honestly, we do this because we believe financial knowledge is the most important thing to improve your life today. So there's a lot of great resources. If you're looking for other free tools, we've got a great blog post. Subscribe to our newsletter. You don't have to just, there's no pressure to work with us, but check us out at foxhillwealth.com. Tons of free tools there. And hopefully you guys enjoy this. Let us know in the comments below what you want to listen to next and hear about and learn about. But yeah, guys, thanks. Thanks for breaking this down today. It was awesome.
Sweet.
Yeah, no
I had a
problem.
lot of fun.
Yeah.
Sweet. All right. We'll see you guys next week.
All right.
Later.
Good. Bye.